Good afternoon, all, and thanks for attending today's webinar on investment options within superannuation. We'll give everyone a few moments to join the webinar and we'll commence shortly. Good afternoon again. For those just joining us, my name is Greg Leaney and I'm a member account specialist with Brighter Super. An important part of my role is guiding our valued members towards a comfortable retirement by giving them a better understanding of their superannuation account. Not surprisingly, one of the things I get asked about most is the investment options available. By the end of the webinar, we aim to give you useful information to help you understand your options. I'll also be asking you some questions as we go through the webinar to help you get a better understanding of the content. I'm also joined today by Aaron, one of our trusted financial advisors, who will speak about how advice can help you make the right investment decision for you, and by Michelle, one of our member account managers, who will be monitoring your questions in the chat today. Before we get things underway, Brighter Super acknowledges the traditional owners of the lands on which we are meeting and pay our respects to their elders, past, present, and emerging. We acknowledge and celebrate the continuation of a living culture that has a unique role in this region. It's important to understand that the information and examples contained in this presentation are general in nature and have been prepared without taking into account your individual objectives, financial situation, or needs. It is important when making decisions about your super options that you obtain the relevant product disclosure statement and target market determination and consider your own personal circumstances. You can access these documents and the Financial Services Guide from the Brighter Super website. Now, today's presentation will run for about 45 minutes, and it's great that many of you have submitted questions already, which we have tried to incorporate into the presentation. You can also post questions in the Q&A feature during our presentation today, which we'll aim to answer directly. As I said, we have Michelle standing by as moderator today, and she has well over 20 years experience in superannuation, and she's regularly out in the field providing super health checks to members in different regions all across Queensland. And hopefully you can see Michelle now.
Hi, everybody. Thank you very much, Greg, and thank you everyone for joining us. I look forward to answering your questions in the Q&A. If you do have a question, just simply put it in the Q&A chat there, and I'll do my very best to answer that for you. Thanks so much, Greg.
Great. And we should have time for questions at the end, and we'll try to answer as many as possible. And as I said, we're lucky enough today to be joined by one of our financial advisors, Aaron, and he'll be presenting a little bit later on. Also, too, we'll be running some poll questions throughout today's presentation. When the question pops up on your screen, please just click an answer that's appropriate to you. But before we move on to the main subject, I'd like to take the opportunity to briefly explain who we are, as we have some non-members joining us today. The merger between LGIA Super and Energy Super, plus the acquisition of Suncorp Super, has enabled us to increase our size and scale. Yet we remain committed to investing in the personalised member services that you know and enjoy. We serve over 285,000 members with more than 34 billion in funds under management, and we've received double-digit returns for the balanced accumulation and balanced pension options in the full year 2024. Now let's jump in and talk superannuation investments. Now you're able to make a number of choices about your super, with one of the most important being deciding how your super is invested. The investment options you choose could make a big difference to your super balance over time. Now, there are various factors to consider when making your decision, and they include how long your money will be invested, also known as your time frame, how comfortable you feel with volatility at your risk appetite, the levels of return you expect, referred to as your return expectation, the other investments that you have and the importance of diversification, and lastly, the amount of money you're investing outside of your super guarantee payments or additional contributions. Now, we'll cover these in more detail in today's presentation. Now, the member online portal contains important information such as your current balance, the contributions received during the financial year, the cost and level of the insurance you hold, any nominated beneficiaries that may be on the account, and your yearly investment performance, and importantly, the fees and costs. You can find this information on your annual benefit statement, which is found in the member online portal under statements and letters. So now you know where to find what investment option you might be in. Let's take a look at what investment options may be available within superannuation. Now, some people think of their super as a single investment, but it can potentially be invested in many different asset types. Most super funds offer different investment choices. Investment options offered by super funds can either be a ready-made mix of different asset classes or one single sector options, which is investing in just one asset class. Diversification can be achieved by choosing a ready-made diversified option, such as a growth or a balanced investment option, or by choosing your own mix of single sector options. Investment choice is the ability to select which ready-made option or asset classes you wish to be invested in. Now we'll jump into our first poll question, which is, do you know which investment option you're in? Just give that a few more seconds. Okay. It's trending towards, nearly 3/4 of the audience today know what their investment option is, which is interesting. When I do my one-on-one meetings, it's probably about 50-50. So that's good to see. So now let's talk about assets in more detail. You may have heard of investment options described as growth or defensive. Assets such as equities, otherwise known as shares, are described as growth assets. These may see volatility over the short term. The value may go up and down, but over the longer time periods, they generally experience higher growth. Asset classes like cash and fixed interest are described as defensive options. They certainly carry less risk in terms of volatility and capital loss, but there's a big but that they also offer less potential for higher returns. The purpose of defensive assets is to provide stability in times of market volatility. Ready-made diversified options are made up of different mixes of growth and defensive asset classes. Now, investment options vary from fund to fund. Some super funds define their investment options in terms of their risk characteristics, such as growth or balanced strategies. You do not have to make an investment choice. However, if you choose not to, your money will be invested in a default investment option. Now, for Brighter Super, that's our My Super option. And depending on your personal time frame, risk appetite, return expectation, this may not be the right option for you. So it's really important to understand that everyone's personal situation varies and everyone's attitude to risk and return is different. So if you're not sure what some of these terms mean, rest assured, we'll discuss these in further detail. Now, some of you may have heard the phrase, past performance is not a reliable indicator of future performance, when hearing super funds talk about their returns. Now, this is not just something they say to absolve themselves of any responsibility. It's a very important thing to remember. So let's have a look at why this is important to understand. And this slide here is one of my favorite slides. We often use it in our presentation, and it shows the performance of 7 different asset classes plus one ready-made diversified option. And this is over a period of 15 years. So let's take a moment to focus on the grey boxes, which represents the ready-made diversified portfolio. For the purpose of this presentation, it's not the asset classes themselves that is important, it's their performance over time. And I'll repeat that, it's not the asset classes themselves that's important, it's really their performance over time. And as you can see, there is not one asset class that has consistently outperformed another. The most striking feature of this chart is that over 15 years, asset classes have performed differently at different times. Sometimes the best performer one year is not as strong as the next. And this is what super funds mean when they say performance is not a reliable indicator of past performance. And this is one of the reasons why super funds may look at taking a diversified approach to investing. By spreading the fund across different asset classes, they can balance the volatility by spreading the risk. Effectively, they're not putting all their eggs in one basket. So as called out on the previous slide, the grey boxes that we can see on this slide is the ready-made diversified portfolio. That is, it is a mix of the different asset classes. And we can see that by diversifying, it has smoothed out the highs and lows of the single asset classes and certainly has provided a less volatile investment choice. We mentioned another consideration that people should take when choosing their investment options in their time frame. How long will they be leaving their funds invested for, or how long will they be invested for before they need to access them? And of course, everyone's time frame is different, just as everybody's attitude towards risk is different. To discuss this and some resources we have available for our members, I will hand over to Aaron. Over to you, Aaron.
Yeah, hi everyone. My name is Aaron, and I'm one of the financial advisors here with Brighter Super. So today, I'm going to take you through some of the tools that we have available to help assist you in making decisions about your investment choices. So, I'm often asked the question, what is the best way to invest my super? And I guess, as you can imagine, there is not one, single investment option that would be a fit for everyone. In fact, there might be, a number of different things to consider when choosing the right investment option for you, one of them being a risk profile. And so what is a risk profile? Well, a risk profile is an individual measure of how you feel about risk and return. So it takes into account your tolerance to market volatility, as well as your investment timeframe and desired return outcomes. We'd all love higher returns without any volatility overall. I'd love that. However, generally speaking, the more risk you take, the higher the return you may expect over the long term. However, it comes with the increased chance of short-term volatility. So for example, the growth option with Brighter Super is expected to generate a higher rate of return over the long term. However, it may fluctuate more during periods of market volatility. And on the other hand, a conservative option is likely to have fewer negative return years overall, and may not drop as far as the growth investment during a downturn. And however, the trade-off for less downside risk is that the returns are expected to be lower over the long term. And understanding your risk profile is important to help better prepare for market volatility and make informed decisions. The concern of being invested outside your risk profile is that if you're invested, too conservatively, you may be missing out on potential returns, which can impact the longevity of your funds in retirement. And conversely, if you invest too aggressively, you may see greater volatility than you are comfortable with. So both of these scenarios may not result in the desired outcome, which is why it's important to understand what your specific risk appetite is. And you can find our investment risk profiler tool on the Brighter Super website under the resources tab. It does ask you 8 questions on topics such as how you feel about negative returns, what action you might take during market volatility, and your superannuation goals. And after answering each question, it will then provide you with your result and some information about the type of investor you are based on your responses. And when answering the questions, I would encourage you to consider the bigger picture. None of us like to see a negative return. However, this is where understanding and knowing your investment time frame does become more relevant. So, for example, if you're in your 40s, you are still 20 years away from being able to access your superannuation. So a negative return may feel very different compared to someone who is considering retirement in the near future. However, it is important to note that even if you are close to retirement, your investment time frame may be longer than you think. Retirement isn't necessarily, a line in the sand where you stop investing in your super. Many members choose to move into a superannuation pension account where the funds do remain invested, and these investment returns can help fund your retirement over the next 20 or 30 years. And so Brighter Super has a variety of pension products available, and we encourage you to contact us to find out more. It's important to note the risk profile tool doesn't provide a recommendation on where to invest your superannuation. So after completing the online tool, if you do wish to receive some help on choosing the best investment option for you, you can book an appointment with a Brighter Super intra-fund advisor. This type of advice is included in your membership, and the conversation is done over the phone, and it usually takes about 20 or 40 minutes. The advisor will go through a similar process with you, asking you a series of questions to determine your risk profile. But what can be helpful is that they will tailor it to you and answer any specific questions that you might have. And so importantly, they will also make a recommendation on where to invest your super funds and will provide you with a statement of advice. And this is a written report to refer to that explains your risk profile and the investment mix that is being recommended. And it also outlines any changes to the investment fees as a result of this advice. And I think at this point, it's a good opportunity to move on to the next poll question, which is, would you consider using the risk profile tool? Yes, no, or you've used it before. And that's excellent to see. Like, I guess, yeah, most of the members here on the webinar would consider using it, which is really important, I think. So do set aside some time to go onto the website and complete that tool if you haven't already. And yeah, we do offer a range of personal advice services, which we will discuss in a bit. But now I will hand over back to Greg. Thank you.
Oh, great. Thanks, Darren. That was interesting. Now, we understand there's a lot to think about when considering your investment option. And the good news is that there is help available from us here at Brighter Super. Brighter Super's commitment to our members is personal service. We have twice the industry average of super specialists per member, and we have a dedicated team here to support you. If you'd like to talk to one of our staff for more general information about your superannuation, then why not book in for a super health check? These are 15-minute phone meetings, are at no additional cost, and they cover a range of general topics about your super. And once you've built up your super knowledge, the next step is to get tailored personal advice. Brighter Super offers a range of personal advice options suited to individual member needs. If you're looking for specific information about making contributions, investment strategies, or insurance needs, the intra-fund advice team that we previously mentioned can assist. Two of the most common questions members ask me as they approach retirement is, how much super do I need to retire? And do I have enough super? Now, a retirement health check is a great way with one of our financial advisors, and they'll help you answer these questions. And we also offer scaled and comprehensive personal advice service. The scaled service provides advice on specific topics such as moving into a transition to retirement account or a pension account. Comprehensive, as the name suggests, it takes a holistic view of your financial situation to tailor advice to suit your individual needs. Now, the cost will depend on the complexity of the advice, and this cost can be deducted from your Brighter Super accumulation account. And look, it's never too early to start planning for your future, so talk to us to find out how we can help. And similar to today's webinar, our seminar webpage covers a range of upcoming webinar topics. So keep an eye on this page as we update it regularly. And if you register for any webinars, regardless if you attend or not, you'll receive a copy of the recording the day following the webinar. Now, on the previous two slides, we discussed our range of advice services. These cover our super health checks and intra-fund advice, both of which are at no additional cost to our members, to other types of advice such as retirement health checks, scaled advice, and of course, comprehensive advice. Now, our second last poll question, after today's webinar, are you planning to get advice? Yes or no? Just give the poll another 10 or so seconds. Oh, that's great. Looks yeah, close to 3/4 are considering getting advice. which is great. And I think that particularly as you're getting closer to retirement, the options and considerations are very personal. So getting that advice can make a big difference to your retirement. Now, I've covered a lot of ground today. You can also visit the resources tab, then go to forms, info sheets on our website for more information on the different forms we've discussed today. And there's also handy information sheets there. Now, on that note, it's over to you for any questions, and I'll ask Michelle to come in and facilitate our Q&A. And I'll also invite Aaron back on screen. And during the Q&A, we'll revert to the Super Health Check slide to give you all additional time should you wish to book in for an appointment. Now I'll hand over to Michelle.
Thanks, Greg. Thanks, Aaron. Well, I've been busy answering some questions in the background. I found it really interesting just in regards to that table that you had, Greg, on the screen in regards to the asset classes. I think it's really good to note that the market, those asset classes perform differently over time. And Aaron, your risk versus return and making choices that are more individual based, very important from probably where you sit as well.
Yeah.
Before we start the Q&A, I just wanted to give another general advice warning. It's important to understand that similar to the webinar itself, the information and examples we give in this Q&A session are general in nature and have been prepared without taking into consideration your financial situations, needs or objectives. Now, we've had several questions on the side that I've been answering for you all, but I've got a few more here that I'd like to address. So Aaron and Greg, if you would assist me, that would be great. But these ones are in relation to, let's have a look here. We've got, I guess it's kind of not investments, but it all relates, right? It all makes up your retirement down the end. So this one is in regards to a difference between having a Brighter Super account and having a pension account and taking withdrawals out of one or the other. And is it a different amount, Aaron, I guess, in terms of how that's received?
Thank you, Michelle. Yeah, and thank you for the question. So it was a long question, but in summary, it appeared to be the member asking, I'm over the age of 60 and I've retired. Is there a difference with taking a lump sum from the accumulation super fund as opposed to taking regular pension payments from a retirement pension fund? So what I thought I'd do is I'd just go through some of the benefits in a very broad way of a pension fund over an accumulation super fund once you have met a retirement condition of release. So this is not an exhaustive list. It's just a very broad, brief summary. So number one, in a retirement pension account, you can receive an automated and regular payment. So this allows you to enjoy your retirement and automatically receive payments at a regular frequency. That requires no ongoing administration for you or any legwork on your part. So you can just enjoy your retirement. I've got clients that are overseas on holidays at the moment, and every fortnight they're going to get a regular income. They don't need to log in and do anything around that. So it's nice and simple and easy for them. But number two, and this is probably one of the more main benefits of a retirement pension fund, is that the earnings in the pension fund are 100% tax-free. In comparison to the earnings in an accumulation super fund, which are taxed on their earnings at up to 15%. So that forms a significant benefit to having a pension fund once you've retired and you've met a condition of release. So having said that, to answer the question again in summary, assuming you are over the age of 60 and you've met a condition of release, taking a lump sum payment from the accumulation super fund, or having the same total amount of payments coming from a pension fund on a regular payment basis, both are tax-free. So I could probably waffle on about this for like the next hour, but anyway.
Oh, we're on a time, and everyone wants to have lunch, I'm sure, Aaron. But I guess another question I've got here that's come through is I'm not sure if my super is performing as well as it should be, and was wondering if I need to change my investment options. So I guess, yeah, if you want to go ahead, Aaron, and have an answer for that one.
Well, you're not. I guess it comes back to the risk profile. It's for most people, it's not always about trying to get the highest rate of return, which can come with taking on the highest level of risk. It's just simply understanding your level of risk and that you are comfortable taking that level of risk. So, very broadly speaking and stereotypically, if you're 30 years of age, you may be likely to be willing to take on a higher level of risk than if you're 65 years of age. And that's just a stereotype. It obviously is very individualistic, but priorities change for people as circumstances change. So again, to summarize, the only way to really determine if your level of returns are in a rate that you're comfortable with would really be to know, I guess, what your risk profile would be. And so the way to determine that would be to use the risk profiler tool and or to engage with our intra-fund advice team here at Brighter Super.
I guess that is a great segue into probably our final question for today, just in regards to time. Regardless of what's happening around the world and possibly some concerns or worries about volatility in certain markets, I think that there's a lot of possible thoughts of I want to preserve as best as I can, and what's the best option for that. I guess you've really touched on understanding the risk profile and being prepared for market movements and making informed decisions rather than emotional decisions.
Yeah.
So reiterating that you would consider a member or non-member actually really drilling down into that risk tolerance and what's right for them, right?
Yeah, if you can look, one of the benefits of understanding your level of risk tolerance and understanding your own risk profile is that, we can tailor a portfolio in your super fund that suits your level of risk. And so one of the benefits of doing that is that you can now just ignore the news and all the noise in the media around markets and volatility because you know how you're invested. You have a good grasp of what you can expect to see in terms of volatility and market movements. And so there's less need to really take on board all of the stress and anxiety that the media puts in front of us, nearly every night around the markets, when in actual fact, up until, the markets are doing quite well. There has been, not really much in the way of market volatility compared to historical times. But we do know, as I guess a very broad saying, time in the market beats timing the market. Anyway, again, I could waffle on this all day.
Great thing to end on. Thanks for that. I'll close off the Q&A now as I've got some more coming through, so I'll get busy at that. But back to you, Greg.
Oh, great. Look, thanks everyone for taking the time to come along and attend our webinar. One last question before we bring to a close. I think it's already popped up on screen. Is overall how satisfied you with today's webinar? Very satisfied. Let's go through the options there. But most importantly, very, very appreciative that you made the time to attend today's webinar. And we hope we've given some more clarity around investments in superannuation. But most importantly, please utilise our website and certainly utilise our team here at Brighter Super. Thanks very much. And we hope to see you soon from Michelle, Aaron and myself. Have a good rest of the day. Take care, everyone.
Thank you. Bye-bye.